So everyone, I'm thrilled to see you all here. I'm Margaret Weichert. I am joined by some esteemed colleagues. I'm going to start with brief introductions and then share a few thoughts of my own before we get into, I think, a very good panel discussion. So first we have Paul Bridgewater, a 20-year veteran of the financial services industry, senior executive with a range of payments companies, including TSYS, Citibank, and Digital River. He has been responsible for product management, innovation, and a host of other executive functions. We also have Wayne Johnson, who's the managing director at Raymond James. He has spent 15 plus years as an analyst in the payments industry. He currently covers for Raymond James 17 transaction processing companies and has previously done similar work with electronic payment companies at SunTrust Robinson Humphrey. We also have Doug Nielsen from US Bank. He's the SVP for Payments Innovation, and actually their remit is broader than just payments. It's bank-wide innovation. And he leads the research and development team, focuses on new concepts, new technologies, all of which affect their broader businesses. And he has also held product strategy and other product and management roles with Amex in the US and Europe. And then finally from Visa, we have Vish Sastry. He's the head of product strategy for Visa Digital Solutions, including Visa Checkout. So knows all about PayWave and mobile wallets. He is involved with the Visa Tokens service as well, and he has previous experiences with the developer platform at E-Trade and in product strategy at PayPal. So I think you'll agree we have a fantastic panel here today to cover the state of the industry, and there's a whole lot of stuff going on in the industry. So this is my slide that there's supposedly a Chinese proverb that says it's a curse that may live in interesting times. I looked it up, and apparently that really isn't a true Chinese proverb, but the payments market, as long as I've been involved in it, has been in a constant state of change. A lot of exciting and fun changes, things like Bitcoin and Apple Pay and mobile transformation of the point of sale. But there's also a lot of less fun things, or at least maybe more multi-sided things with risk, data breaches, regulatory changes from the Durbin Amendment, the CARD Act, people trying to figure out how do they make their business models work in a mobile environment, subject to lawsuits and new competitive threats. And it's in this environment that I think we here in Georgia are challenged to really understand the industry we're in and rise to the challenge to innovate against the difficulties we face, and also to seize the opportunities that technology and the capabilities that some of them are built here at Georgia Tech or elsewhere in the region around information security, digital analytics, mobility, telecommunications, leveraging those skills and combining them with payments, I think really enable us to take a unique view of how we can go into the future. So as context for the panel we're going to talk about today, when I look at the payments industry and I talk to my clients, there are four key things that are on clients' minds. And depending on who the clients are, they vary. If you're a bank, regulatory and compliance is the number one issue. It's crowding almost everything else off your agenda. Things like Dodd-Frank and the Durbin Amendment were focuses a few years ago. Now things like critical operations and really understanding how you resolve in a crisis your critical payment operations or other FinTech challenges are major issues. AML and OFAC continue to be issues. Faster payments is finally starting to move. I think this is one thing where I was one of the skeptics, thinking that we would have a real challenge to see this come to fruition in a world where there were so many other technology investments happening. But it seems like there's some, maybe not super fast, but some movement on that front. And then with all the data breaches and the changes looking at data security and transaction security, I think these are all really big challenges eating up a lot of time and a lot of attention. Efficiency focus, a lot of players, whether it's big banks or innovators like PayPal looking to go and be spun off, focus on efficiency, throughput, absolute focus on the bottom line. This is a major issue for all of the players. This isn't like the old dot-com bubble. All of the players in the payment space have to be very cost conscious. And then the more fun stuff, people are really looking at customer experience around payments. It's not enough to have a tap and go solution be 1 millisecond faster than a swipe and go solution. There needs to be something materially better for consumers in order for them to adopt new payment technology. We have lots of ingrained habits around how we pay for things, and the customer experience is one of those areas where I think we're going to see a lot of innovation and a lot of really cool new technology plays helping combine the payment itself and the financial transaction itself with information, with loyalty, with a richer experience. And then finally, and I think we'll talk a ton about this, is there's a whole lot of new competitors. There's non-bank technology players. People knew PayPal was in the payments business. Pay is in their name. People didn't necessarily expect Apple to be as big in payments as they may potentially be. Players like Walmart partnering with Amex, clearly getting much more deeply entrenched in the transaction processing business. But things like data analytics, security, and cloud computing are all affecting who can actually be in this business. So retailers, networks are all looking at different ways that they can play in this space. So we can take all those big factors. One of the key things that I like to share with people, particularly people like myself who, we consider ourselves payments people. And in a lot of cases, us payments people have been very proud of how opaque and complex our industry is. Nobody else can understand it. Well, tell that to all the innovators in Silicon Valley and in Boston, New York, and Berlin who are coming up with new ideas around payments. And typically these players are not coming at it from a transaction processing lens. They're coming at it from a customer lens. And they're starting with the commerce landscape and not a payments view. So they're not innovating around how the point of sale exists today. They're innovating around how do I make a shopping experience better for a consumer, regardless of what that experience is. And some of my favorite examples, my Starbucks example, is combining loyalty with point of sale purchase and knowledge of my prepaid balance. Nordstrom's makes it easier to buy shoes during a shoe sale because it's opening up the point of sale to every sales clerk on the floor. And it's helping them find, is that shoe available in the back room in my size, and saving us all time. Uber's making it easier to pay because I don't even have to look at anything when I get out of the car. I just leave. I don't have to fumble with cash or card receipt while someone's standing on the sidewalk looking evilly at me. So this landscape includes payment, and payment is the fulcrum point. It's the moment of truth in commerce, but it is not the point of commerce. People don't go out in the morning and say, I'm going to pay today. They go shopping, they go to work, they're doing things in their lives, and the players that are really thinking about this end-to-end experience are the ones that we believe are going to have the most success in this space. So if you look in this continuum, I'm not going to dwell on this. I think the panelists will talk about it. But some of the players who are not traditional financial services players are covering this landscape. Before we go to our illustrious colleagues on the panel, I want to start with our first polling question. So we've got a lot of mobile wallets been launched this year. Apple Pay, SoftCard, formerly known as ISIS, Visa Checkout, mobile NFC solutions of various stripes. There's a lot of market momentum. There's probably as many press releases as there are transactions at this point, but there's a ton of noise and a lot of interest. I have a phone capable of doing mobile payments at Toys R Us, at Walgreens, at a host of other point of sale locations. So my question to you, and this is a polling question and the instructions are here, is by the end of 2015, will mobile NFC payments have achieved meaningful market penetration, by which I'm defining greater than 5% of POS sales volume. And just by context, that's approximately the general purpose sales volume of players like Amex and Discover. So with that, go ahead and vote, and I'm going to shift my seat and get into our panel discussion. All right, so the first question, because I led the panel with my opinion about customer experience, I'd like to start with Vish and ask, what do you think customers are looking for from financial services players and payments, and what do you think an ideal experience would look like for them?
You know, you really hit the nail on the head when you said that consumers are really looking at the commerce experience and players in the industry are looking at that commerce experience. I think that's really what's changed a lot of the payments landscape over the last 5+ years or so. And because of that, I think what you're seeing is a fracturing of what the kind of traditional ideal payment experience is. You know, historically, I think most people's perspective would be that experience would be a no signature required swipe of a card at a retailer. And because of the explosion in both e-commerce, but more importantly, mobile devices and mobile commerce, I think what you're starting to see happen is the rise of those unique types of experiences like the Starbucks experience, like Uber, and other types of experiences there. So what I think you're going to actually see happening is that fracturing of the landscape. And so I think what's going to be important for FinTech players is just, again, to keep in mind what are the places and niches within that landscape where there are problems to be solved. What are the places that merchants, consumers are looking for solutions, and also for players like ourselves at Visa to really be flexible in providing that great consumer experience regardless of the commerce experience, of the form factor, of the channel that the consumer is trying to use. And that's really what we're trying to do with a lot of our digital innovation solutions. So that's really what I think what the customers are going to be looking for in their commerce experience.
Great. Doug, do you have thoughts on that?
Yeah, and looking at it from just the bank's perspective, obviously we have a merchant side as well as a bank consumer's perspective. And if you look at it from the bank consumer's perspective, they're looking for that same thing. They're not looking for, to badly mangle Mark Twain, you know, the rumors of the death of the bank branch is greatly exaggerated. So believe it or not, even millennials still want to go to a branch. And the reality is they're looking for a seamless omni-channel experience regardless of where they start their journey. So it could be in a physical branch or it could be on some of the cool digital solutions that the banks and a lot of banks have. So what you have to make sure is that in every channel you've got a very sharp and seamless experience across that journey. Just one quick example of what the bank's doing. We just opened up on Santana Row in Silicon Valley, on the west side of San Jose, our branch of the future, and it really combines both high touch and high tech. So the consumer can come in and we've got a range of experts across all the different areas of the bank, wealth management, small business, payments, etc. So if you want an in-depth discussion with one of our experts, you can have that. But we also have self-service kiosks where you can open up an account, get cash out, put cash in. You can set up your automatic bill pay and see demos on a lot of different products and services. So people are looking for a lot of kind of a mix of the two. And if you think about what's the ideal experience, say you're looking for a mortgage, you should be able to start that journey online, take a look at what rates you have, start to fill out your forms, and then go into your local branch and maybe complete the process. So again, it's got to be seamless across all those channels. So I think the way we look at it is don't just throw all of your money after the bright, shiny object of digital. You need to make sure you're putting money into both the branch systems as well as into the newer technologies.
Thanks. And Paul, I mean, I'd love your perspective on this question, and if you could add in also, in your past experience, you worked in consumer businesses, in wholesale businesses. What customer segments do you think really, some of these trends mean the most for?
I think there's two things. One, I believe that that word pay, the payment component in the overall value chain, is becoming less and less interesting. And your comments around the the e-commerce experience actually, and then payments becoming an event within the overall e-commerce experience is critically important. I also believe that I think millennials. I'm interested because I think my view is if millennials go into branches because they have to go into branches. They don't really want to go into branches, and the reason why they have to go into branches to finish a application for a new bank account or a mortgage, etc., is because the process that sits behind it hasn't changed for many, many years. And I think the companies that are really addressing the underlying process and the procedures on how to open up accounts, how to manage risk, how to calculate risk, and how to apply technology to improve that process are the ones that are really starting to create that shining light within our industry. With regards to channels and what's driving, I think that the push on low energy Bluetooth, I think is a really interesting area of technology. I think retailers being able to engage real time with a specific type of consumer and modify the experience specifically to that consumer and present offers or opportunities to drive purchasing and loyalty at an individual level, I think is another really interesting area of innovation and technology within our industry at the moment. So you talk about all of that, and what you don't talk about is the actual event of the payment. It's everything else around it, and clearly data is driving a lot of that as well. So that's it's an exciting time for our industry.
Right. Well, and one of the things that's clearly come up in the discussion so far, and certainly is going to be a focus here today, is the role of technology in playing with customer experience, and obviously mobile wallets and some of the transformation around the point of sale getting a lot of the attention. And I wanted to ask you, Wayne, as kind of an objective viewer of this landscape, given everything that Apple and Google and Softcard and MCX and Visa and MasterCard are doing in the mobile wallet space, how did the solutions get viewed in an objective way, in light of these customer experience questions? So what's your perspective on this particular space?
Okay, so thanks. So I'd say the first thing is that simplicity is everything. And if it's not easy for the consumer, they're not going to adopt it. So the challenge, of course, is that using a credit card at the retail point of sale, a physical credit card, is a very simple and easy to understand process, and everyone is familiar with that. So what am I going to gain by using a mobile wallet to begin with, number one? Number two, what's that process? Who's made it easy? And what's the ubiquity of that application? So it's early stages. Obviously, there's, as your question implies, there's a lot of balls in the air right now without any definitive statistical answers that have any meaning, just because it's the first inning of this game, so to speak. So what the technology service providers have done, like the Googles and Softcard now, formerly ISIS, and eventually Apple, is they've brought a lot of attention in the public media to what the simplicity and ubiquity of these services could be. And we haven't seen it yet because we've got a chicken and egg issue. I need an iPhone 6 or 6 Plus, and I need a point of sale device that is willing to accept or technologically enabled to accept NFC, among other capabilities. And we're in the process, this industry's in the process of that upgrade cycle, but it's very early stages in this. So what does that mean? I was just on a business trip. I couldn't check out of my hotel because the printer went down, right? So I'm sitting there, I'm waiting for it, and they eventually emailed it to me, which is fine, the preferred method anyway, but that should all be automatic. Why can't I just have an NFC check-in at the hotel when I get there, and if need be, I can have an NFC checkout on the way out, or maybe it's automated. I don't have to worry about that. Same thing in a taxi cab, same thing in a restaurant. So convenience matters. It takes about 7 seconds or so, to utilize a credit card at retail point of sale, sending the authorization signal and receiving the response. So people have been trained, and I've been trained, I think, to expect a similar experience in whatever my alternative is going to be. And if the high volume retailers are going to adopt the latest technology first, because they have the most to gain by it and the most to lose by it if they're not in compliance with EMV in October of this year, I think that consumers are going to want to have that same experience at small and mid-sized retailers over time as well. So for the first time, where I'm going with this is I think that what Apple has done is they have 800 million or so iTunes accounts. So they're a front-end funnel, and that starts to solve half of the front-end equation. It's up to the retailers to solve the back end, so to speak, or the receiving signal for NFC. And once that happens, I think we're going to have more statistics in terms of who's got the best approach and what's the most popular. But simplicity is everything. Speed is everything. The more specialized it is and the more I have to work for it, the less likely it's going to be successful.
So Vish, I have to let you weigh in since this is like the focus of your job. So in terms of the customer value proposition for the mobile wallet, because anybody who knows me has heard me riff on wallets. Men hate wallets, women don't hate wallets, and women do all the shopping.
Right.
So tell me, what is the customer value proposition for mobile wallets?
I also share that hate or love of shopping for wallets. I'm really picky about my wallets, and took about a year to find the one that I finally ended up with myself. But I'd build upon what Wayne said, that consumers want simplicity and convenience. But I also think they're looking for two other things as they migrate to these mobile wallet experiences. One is increased security, and I think consumers really have been hit hard over the course of the past 2 years with multiple breaches at very large merchants, resulting in a wave of reissuance. And by now, I think I've seen in a statistic quoted in the press that almost 1 in 3 consumers in the U.S. has had a reissued card at this point. And that really changes the consumer experience negatively in a lot of different ways. So many of us now have recurring billing relationships, and it's really hard to get those rebuilt. Or you've got your card on file with the merchant. It's really hard to get that replaced as that card gets reissued. So finding ways to provide increased security and increased convenience as reissuance happens, I think that's a big value add that mobile wallet providers can bring to the table. And then again, building on what we talked about in the initial question, I think increased functionality around that commerce experience. And again, I'll go to a couple of different examples. We're all familiar with Starbucks and the value that they add with their rewards and their loyalty. We've seen other providers do that as well. I mean, banks, you'll see them provide a ton of value in providing transactional alerts and notifications to consumers of both individual transaction events and when fraudulent activity is detected. You're also seeing retailers start to bring that kind of intelligence into their own systems as well. We've seen Gap, for example, use real-time messaging, picking up on transactions that are occurring in their stores and being able to go back to their consumers and say, hey, we'll reward you for repeat purchases or for future purchases with incremental discounts based on past activity. So I think these types of things are all types of value adds that can come about as part of that mobile wallet ecosystem. I don't think the simplicity and convenience absolutely are keys there, and I think they're going to be even more so as the industry in the U.S. moves to chip technologies, because I don't think what a lot of consumers are ready for is the friction of a chip payment experience. They're going to love the security of it and not having to get a card reissued time and time and time again, but I think what they're not going to be ready for is the lack of convenience from what they're used to with their swipe and no signature required and going to chip. I think that's, again, another place where mobile can help, because with the convenience of tap and go contactless payments, that's really a big, big value that whether it's Apple, whether it's platform providers that are going to be building on top of Android and the NFC HCE ecosystem that everybody in the ecosystem is building out there. I think you're really going to see that bring that convenience of the no signature required customer experience back to the ecosystem, even as chip starts to get out there. So,
great. All right, in all the stuff we've talked about to date, Doug, we haven't talked a lot about traditional banks or traditional processors. And in this world, where a lot of the change is actually being introduced by non-banks and non-traditional processors, how do the players in this room, most of whom are with more traditional banks and processors, how do they differentiate? Is there a role for ISVs and bars, other technology plays? What's your perspective on that?
Yeah, I think really it's all about partnership, and I've been in the merchant processing industry since I was a small child, or actually, I guess I never was a small child, I was just younger. But anyway, even 5 years ago, really the game was more about really how could you build scale through acquisition? Buying ISOs, buying portfolios, doing JVs internationally. It was all about scale, driving down your costs, and then providing the lowest possible cost. And at the small merchant end, at the SMBs, it was all about, I called the analogy of the ever leaking bathtub. You just kept filling up the tub and it kept leaking because merchants would churn for a lower discount rate. And I think that's really changed now, is that payments have to be secure and they have to be cost effective. But merchants are saying, well, what else? Where's the commerce part of it, as you've been mentioning? So I really think it's all about partnerships, particularly for payment processors. And if you look at all the action the last, say, year and a half around acquisitions in this space, it really is about getting tighter integrated with the ISV and VAR community. So if you think about it, a lot of merchants are looking to whether it be their restaurant management system provider, their ECR provider, they're looking to those entities even to make some recommendations on who their payment processor should be. So I think having tighter links and partnerships with those folks, so whether it be with the Microses of the world, it could be with shopping cart vendors, could be with platform vendors like GSI Commerce and Magento, which interestingly will probably be on the block if eBay Enterprise decides to spin them off, as they've been mentioning. So I think the players really just have to partner well to provide the kind of value-added services that merchants are really looking for. And if the merchants want to deliver on the omni-channel vision, they need to have all their partners working together, and it can't just be payments over here and their CRM vendor over here. It's got to be an integrated bundle that they're looking for.
I think a lot of the players who made acquisitions and big partnerships this year were thinking some of what Doug was, thinking about. So Vantiv, Mercury, FIS Clear to Pay, ACI Retail Decisions, Ingenico Global Collect, Global Payments PayPros, a lot of activity in the space. So Wayne, what's kind of your perspective on, what do you think of that type of deal overall? Is it a continuing trend? Is it something people should look at? And how do you think it adds to value in the marketplace?
Right. So there's 5 tiers of retailers in the U.S. based on volume. And the top 2 tiers represent roughly 80% of that payment volume at the retail point of sale. And then the bottom 2 tiers is much smaller number, and that sweet spot's in the middle. And the pricing for servicing those retailers in the top 2 tiers and the bottom 3 are being squeezed. And the mid-tier has been more stable. And the basic reason seems to be that they're big enough to generate volume and be profitable to serve, but they're not so big that they demand they're not overly demanding, and they can't command dramatic price decreases on the merchant processing rates overall. For those that want to just shop on price, there will always be that component. But these acquisitions that you've just mentioned, those trends, are designed to serve that mid-market, in my opinion. And it's designed to provide the omni-channel capability. So that is the new paradigm, if you will, within the payment space. And it's been evolving for some time, so it's not a total surprise. So the retailers want one number to call. They don't want 5 service providers. If something goes wrong with a POS device, if something goes wrong with the payment terminal or the ECR, they want one number to touch base with. And they want that service provider to handle whether it's software, inventory management, payments related, whatever that circumstance may be. So all of those acquisitions that you just mentioned are designed to serve that mid-market, omni-channel, you can call it an ISV if you want, type of capability, where the mid-market retailer is saying, hey, I want to accept all this stuff, and I want to upgrade my inventory management, and I want to be efficient, I want to be on the internet, I want to accept mobile, but that's not my business. My business is to sell flip-flops and t-shirts. So I want someone that can do that, and I don't want to make 5 or 6 calls to make that happen. I don't want to be the expert and choose. I want them to come to me and be able to lay it out A to Z, one-stop shop.
All right, the last question before I open it up to questions from the floor, I'm going to ask Paul. This is a question that not everyone wanted to answer. So the question is, who holds the greatest power across the value chain, and how is the power equation shifting? And in the value chain, I put consumers and merchants and banks and networks and technology players, and What's your perspective on the power shifts?
Yeah, that's an interesting question. So having worked on both the merchant side of the industry as well as the issuing side of the industry, I think that the shift and the swing is definitely moving more and more onto the retailer side at the moment. Whereas probably 8-10 years ago it was very much in the issuer side versus the merchant side. I think the ones that are going to be the winners are the companies that are in this room today. Payment service providers who are able to augment themselves into providing more value up the value chain. It was an interesting discussion that we had around some of the industry segments. If you look at where change has happened and innovation has happened, and we've shifted from this specific payment over to more of a commerce industry, it's kind of like a one-to-one relationship. So it's Starbucks selling coffee, where they're in control of that. They can control that experience. Uber providing taxi car services, well, that's they're in control of that. When you start looking at more of the some of the more complicated industry segments, like for instance, I think Doug or Vish mentioned about travel. Travel is an incredibly complicated segment or vertical to really create a end-to-end experience. Because you involve not only the right from when somebody joins a company for them being issued a T&E or a corporate card, all the way from the hotels or the booking systems, the room key access, all of the F&B systems within those hotel chains, etc. All of the travel that they might do from air to car to automobile, etc. So all of that, if you really want to create a compelling e-commerce solution, which is going to be interesting for a consumer to want to interact with and create value. I think acquisition is one of those areas where you need to where payment providers will start to look at. So I think a lot of payment providers are going to start to narrow in on specific segments and how deep can I go in that segment? How can I integrate that segment? How can I really change the overall experience that touches retailers, service providers, consumers. So there's definitely a coming together, and I think that's going to drive a lot of the M&A activity over the next 2 to 3 years. I think we're going to get payment providers, traditional payment providers, starting to focus on specific verticals, specific segments, and go deep, but come up the value chain to create profitability.
Right. All right. Well, while I am getting you guys to think about questions you want to ask from the floor, I want to ask if we can put the results up from the poll. So you guys are bullish. I can't quite see the numbers.
60% say yes.
60% say 5%. To put that in context, in a much more simple, controlled environment with 100% rollout of Starbucks point of sales, except the ones in the airports, accepting mobile payments, they got 10% in about a year. So I actually, I'm not as bullish as you guys, but I'm glad you guys are bullish because I think a lot of really cool stuff's going to happen. Questions on the floor. While we're waiting, I think that, a couple of the things I just wanted to recap that we heard. Leveraging technology to create seamless commerce experiences, I think is a common theme. Customize, relevant, simple, secure solutions. These are all, great adjectives, but I think these are the bar that is set for us. Looks like maybe we have someone in the back.
Question for the panel. Samsung's acquisition of Loop Pay that was announced yesterday, enabling factor to mobile payments, mobile commerce in general, and what does this mean for Apple Pay?
Doug, you look like you're going to
Didn't hear the
go.
last part of the question.
Oh, can you repeat the last part of the question?
What does this mean for Apple Pay?
My take is it's very interesting. Obviously, I think that Apple Pay has got a great start, and I think to Wayne's comment, it's still kind of the first inning of mobile payments, and obviously, I think it's given it a nice push. I think all the upgrades of merchant terminals that will have EMV plus contactless will be great in helping the merchant enablement side of it. I think to me the jury's probably still out. Is magstripe emulation something that really is the future, or is that was that a bridging technology that its time has passed? So jury's still out in my mind.
Okay.
I think a number of us believe that the loop solution from a technology perspective is more of a bridging technology. I think with EMV, the EMV train charging down the tracks, I think it's kind of like I worked in Germany for a number of years, and it was the evolution of the acceptance of credit cards in Germany. In the early 90s, it feels kind of like we're in the same sort of environment at the moment, where we're sort of potentially evolving into a different way for a payment to be enabled, or a different type of acceptance. I think it's just part of the overall kind of evolution of the payments industry as a whole. I don't get too excited whether I tap, swipe, or slot. It's the acceptance of the transaction. It's more what's around it.
Yeah. So thanks for that. I think great point, and we didn't get to wearables today, but I think for the coffee and cocktails, I would definitely encourage people to have this conversation. And before we leave, I'm going to ask, just for a show of hands, final vote on something that relates to the whole issue of adoption. I think we have time for 2 more questions. So the question was about security. What do you see in the market about protecting the network and transactions that is interesting or compelling?
I'll say tokenization. From my view, tokenization is a huge step forwards in securing the industry end to end, and I look forward to that continued adoption of tokenization and token enablers and token acceptors being a very common term within our industry in the coming years. It's huge.
Yeah, I think we look at security as a multi-layered. Your best defense is a multi-layered system of defenses, and I think tokenization is a massive piece of that, and that's why we've made such a big investment in those capabilities. I do think there are probably 3 or 4 more pieces that are pretty critical. Part of the reason that we've put the EMV mandate in place and the liability shift mandate is to encourage the adoption of the underlying EMV technology, which has been so successful in helping combat counterfeit fraud outside the U.S. We want to bring that success here into the U.S. as well. I think there are 2 other things that are also critical to security as well. One is really network level and bank level analytics. So you're seeing both Visa and our acquiring and issuing partners, as well as others in the ecosystem, invest a ton in big data analytics to really tweak and make more precise our fraud modeling and be able to track events in real time, be able to decline transactions in advance, be able to shift cards off once we start to see fraudulent events occur. And I think the last piece, and the piece where we probably need to make the most progress that we just haven't seen enough so far, but we're working really hard against, and I think Doug can probably speak to this a little bit more as well, is end-to-end encryption. And I think that's something that's going to be critical so that we can prevent events like breaches that have happened recently, where you've got malicious software at the point of sale intercepting payment card information. I think it's really critical to get that end-to-end encryption in place so that we can protect protect the entire ecosystem. So really those four things: tokenization, EMV, network and bank level analytics, big data analytics, and end-to-end encryption, I think are the four keys to securing payments.
Yeah, and I'd jump off that. The multi-layer is really key. It's almost like EMV at the point of sale, kind of the first step, end-to-end encryption, tokenization, even just helping merchants make sure they're on top of their PCI compliance from that perspective. And on the e-commerce side, being able to provide, on top of tokenization, some of the fraud screening tools that come from players like 41st Parameter, Certify, Count, and people like that. So one bullet's not going to win the war. It's multiple.
Okay, and I did say we had one more question, so over here.
Just a question about adoption, end user adoption of the mobile wallets. Obviously, there's a lot of benefits with mitigating risk and convenience. There's a lot of capital investment that needs to be done on it. What other types of incentives do you guys see in encouraging people to move over to that form? Because it does take a little bit of effort on their behalf. Incentive rewards programs, other types of benefits outside of just, I don't fear the risk of going through the pain of having a card reissued. It can be reissued. What are some other incentives you guys see on the horizon?
Doug or Vish?
I'll speak to our own experience, and certainly we've been out there building new forms of acceptance, whether it's with Visa Checkout and the e-commerce channel, whether it's in partnership with Apple and Apple Pay and other types of experiences. And I'd say there's, again, in the vein of what we said around security, there's no magic bullet. Sometimes it does take consumer incentives to get them to use the product, understand how it works. I think that was a challenge that the other gentleman mentioned a little bit earlier as well, is just getting that consistency around the user experience. And then I think also just getting the user experience right and making it as simple as possible. And that's something that Apple has just, my goodness, they've nailed it out as part of what they've done. And they've made it so magical, and they've promoted it through their own brand marketing, as well as in partnership with a lot of the issuing financial institutions that are on that platform as well. So I think, consumer education, incentives to encourage usage, but most of all, just getting that core experience simple and convenient and really intuitive. Those seem to be the factors of success to me.
Absolutely. I think on top of that, I think, as the gentleman mentioned, I think loyalty, rewards is part of it, because, as we've been mentioning here, taking out a chip card or even a contactless card, is it really going to make it a lot quicker? You got to give the consumer some more reason to pull out that new device or new app. So I think that'll be another part.
I'll give you one viewpoint. I think that also, when you look at mobile wallets, typically today you have to have a product to load into a mobile wallet. I think the interesting evolution will be when you are able to take a mobile wallet and actually apply for and create a product that then works within the wallet right from day one. So coming back to what I mentioned earlier about that whole end-to-end process, I think that's something that's going to continue to drive adoption.
Okay, so as a parting shot, speaking of end-to-end processes around mobile payment adoption, I have one last question I want to do by the show of hands. How many of the folks in this room have done a mobile payment transaction in the last 24 hours? Raise them high so we can see. Okay. Keep your hand up if it was an NFC transaction. Somebody saying 5%? Okay. 5% of people in Transaction Alley who are in the payments business. So hopefully that will be a good segue to our next networking sessions. I thank you all for your attention and your questions, and I thank the panelists for their great perspectives.
Thanks.